Hi and welcome to the A.R.D. Consultancy Market Update for January 2021. Andrew and I will sit and chat briefly about the markets and how they handled 2020 and looking forward where we see some opportunity in the investment world. I think there's no doubt that 2020 was a turbulent year, but what's your overview of the market as a whole, and then looking at our particular investment funds and portfolios?
Yeah, well, I think the market started the year very high, optimistic throughout the world, and markets reached new levels. The pandemic then took effect, and was notable first of all in China and then spread worldwide fairly quickly. The effect it caused on the performance of our portfolios was quite dramatic when we saw the big fall the end of February, beginning of March, with all portfolios falling in value because they followed the equity markets and also the fixed interest and property markets worldwide. The recovery though was very, very swift and sudden, and the portfolios rebounded. Notable drivers from that were the Far East, which picked up very, very quickly, and also the US surprisingly did better than expected in many of the areas. Big stock companies doing particularly well, with the FANG stock putting on new record highs. And we pick out perhaps Tesla at 7 times its growth over the year, which was immense. Fortunately, we were holding a lot of the tech stock, the big stock in our portfolios, and that did really, really well. The UK was hit quite badly and probably underperformed the rest of the world as money came out, both because of the pandemic and because of Brexit. And then we saw towards the end of the year the market rebounding very, very dramatically when we got, especially in December, when the news came out the Brexit deal was actually done in the most part.
Yes.
Europe, I think we can say, mixed bag really in Europe. Most of the stock 600 were losers, but there were particular bright spots, especially during December and November, with German manufacturing picking up and consumer confidence starting to bite in and get looking forward to better things. Commercial property, well.
Yep. There's no surprise there that that obviously had a sudden drop, but it'll slowly recover just with high streets and things that they are. Lockdown's really effective, they're going to be closed for quite some time, but the quality of stocks, if you have warehousing and good office spaces in the big cities, they're expected to come back. It will just recover at a slower pace because, simply put, they can't get out to put a value on them. So a lot of these property funds are still closed. We've moved out of that space into a more global based property fund now, which has been certainly worthwhile doing.
Yes. And finally, fixed interest, so posh couple of words for debt. Then the fixed interest rates probably at an all-time low historically, and this probably was reflected in probably what's going to happen in 2021, but in 2020 actually we got some really good returns from the fixed interest funds as companies and governments were refinancing, and they were able to, fund managers, capitalise on some tranches of cash being brought to market. So fixed interest did surprisingly well. Looking forward, probably not so.
I think overall, looking at the investment portfolios that we run here, 2020 actually was a good year for investment returns. Like we say, started the year off well. We had the market drop in March, but across the board, every investment portfolio was up by the year end. So that was really positive. Thinking into 2021, there's still a lot of opportunities for investment growth. Hopefully, if the vaccine gets rolled out and lockdowns lifted, then we expect to see people spending money again, going on holiday, really boosting the economy around the world. That should hopefully drive up potential for investment returns.
Yep. I think the next year, the next 3 years are going to be spectacular in terms of seeing great performance without taking huge risks. The groundwork's there with the vaccines being rolled out, and then we have Brexit, which is great for the UK in terms of what we do, making money for people, and we've said that ever since the referendum result came out. More money is coming now into the UK markets from investors throughout the world, and that again is going to boost prices. I think most of the clever people are saying the UK market is undervalued at the moment, and in terms of world growth, it looks set to be a good period for the UK. And pleased to say we're heavily overweight in the UK and UK equities, and we have been for a number of years really, because it's all very well and good being wise after the event, but you want to be wise before the event, which is what we try to do.
Yeah.
The other bright spot probably is going to be the Far East.
Yes, so well, our particular fund invested in the Far East grew by 26% last year. A lot due to IT technologies, and one of the big contributors was a Japanese company who produce face masks, and they just trying to keep up with demand. It's all hands on deck, working round the clock, and to fulfill orders they're busy, and that doesn't seem to be changing. So hopefully there's a lot more opportunity there, and we want to keep that holding in Asia and hopefully see some good growth. So, starting something new this year, a top tip from yourself. We'll do one monthly. What's your top tip for January 2021?
Top tip would be, thank you for asking, check what interest rate, if any, you're getting on your cash balances. We have more cash invested at the moment in the UK than we've seen for a very long time, but we've seen historical interest rates at all-time lows, and we really need to move away from that and just look into your accounts, family, friends accounts as well, check the balances, check if you're getting any interest, and see if that money could be better invested elsewhere with taking low risk but maximising what you've got.
Yeah, excellent.